very excited to be here with you. In addition to being the CEO and chairman of Microstrategy, you're also the Giga Chat of Bitcoin. So this weekend, I saw a tweet that said about 6 different people had said that they had orange pilled Michael Saylor. How did you actually learn about Bitcoin?
Okay. For the record, by the way, when someone called me a Chad on Twitter, I actually had to go on Google and I had to Google Chad to figure out what it was. And then when they called me the Giga Chad, I couldn't find a Giga Chad Google. But then I studied up on all my Bitcoin mining terminology and energy terminology, and all started to make sense a bit. With regard to Bitcoin's an interesting thing because
very good.
When you first hear about it, if it's not a problem that you've got, if you don't have an urgent need to understand it, you're not very open-minded. And so you tend to dismiss it as some kind of technology startup thing, like, oh, people are doing this Uber thing, or they're doing this Airbnb thing, or they're doing this, this Second Life thing, or they're doing this Bitcoin thing. These are all, interesting techno things. So, I honestly can't tell you the first person who should have been a Bitcoin, but I must have known about it by 2013 because I was tweeting dumb things about it, right? I thought that it was going to go away like online gambling. So I must have been reading about it. Then as best I can piece together, at some point, Erica from Bank of Erica must have come to my house in Miami and pitched me on it, and I dismissed her. And then at one point I met Perry-Ann Boring from the Digital Chamber of Commerce, and she must have brought up this thing. And I thought, I don't really know what that is, but it seems kind of odd. And I know my friend Eric Weiss back in 2018 or 20 or so talked about his crypto venture fund and his interest in Bitcoin. And I kind of dismissed it. So at least those 3, I have this vague appearance. But let me tell you, if you'd asked me in 2020, I would have just remembered Eric. And it wasn't until I re-met Perry-Ann and Erica, and they reminded me, they're like, you really did like totally dismiss us out of hand the first time we pitched you on this. I'm like, I'm sorry. I probably, if I could do it again, I would have made a lot of money maybe, but it's, everybody's probably got that story right now. The other 2 or 3, they're probably correct. They're probably correct. It's just, people have this, we're all full of our own ideas. If you don't think there's a macroeconomic issue, someone talks about inflation and you say, well, it's only 2%. Oh, it's 4%, but it's transitory. It's going away. And you dismiss them. And if you don't really understand cryptocurrency and someone talks about Bitcoin, you think it's just another interesting, crazy techno thing, and you dismiss it because you're more excited about the next version of the Apple Watch. Mm-hmm. And I was probably more excited about the next version of the Apple Watch, and that was my thing. And I was there. And then in 2020, right, my world opened up macroeconomically. I became sensitive to inflation. Mm-hmm. And technically, I became aware of cryptocurrency and Bitcoin in particular. And so instead of looking through a little straw, right, I started seeing the world in a different way. And then I started remembering these things.
Mm-hmm. And you brought that knowledge to your company, right? So you've used your existing company's software business and balance sheet to leverage raising cash to purchase additional Bitcoin. So how has that changed your corporate mandate? And what has the response been from your shareholders?
Our corporate mandate was run a business intelligence enterprise software company mm-hmm. in March of 2020. And we were very focused on it. We generated a lot of cash. And our treasury or balance sheet strategy was conventional treasury policy, invest the cash in short-dated treasury bond sovereign debt, not more than 3-year debt. And with the rest of the cash, buy our stock back. Mm-hmm. And, that resulted in us probably buying like $300 or $400 million worth of stock back. And it didn't really help. The stock didn't go up. Like, we didn't have a good success by buying the stock back, and we didn't have much success investing in treasuries either, because we never got more than, like, for that decade, 2%. And then when the treasury strategy went to zero, and we realized that buying the stock back wasn't helping. I think our stock was $120 a share, and we had $60 a share in cash. And at one point, our stock got to $90 a share during March, and it was back to about 120 in May and June. So our thought was, well, we can just give all the capital back to the shareholders, and we'll basically give $60 a share in cash back, and now we'll have a company that's worth $60 a share, that's growing 0% a year to 5% a year, throwing off a lot of cash. But we actually knew that shareholders weren't very enthusiastic about that, because if you're not growing 20% a year, they just put you in this bucket of you're a tired value stock. And so that was one strategy. And the other strategy was, what if we bought something that would go up more than the rate at which the money supply expands? And so that's what kicked us off on this journey where we discovered Bitcoin. And we didn't originally completely do Bitcoin. What we did is we took half of our money and we did a share buyback, a Dutch auction. And we offered to buy $250 million worth of our stock back. And the other half we bought Bitcoin with. So it was a 50-50 split. And the Dutch auction took 20 days. At the end of the 20 days, we only had $75 million of shares tendered. So then we had an extra $175 million that we didn't need to run the business. So then we decided we would go all in on Bitcoin, and that became $425 million invested in Bitcoin and $75 million returned to the shareholders. The stock traded up to 160, 170, then 180, then 190, then 200, then 220, and then 250. And when it got to 300, 300 was the highest it had been in a decade. So we concluded that the shareholders liked that. And we generated some more cash. So we bought another 50 or 75 million worth of Bitcoin. So we had bought 500 million worth of Bitcoin. The stock doubled, Bitcoin doubled. So now we had $1 billion worth of an asset, and we still hadn't changed the mandate of the company. We still run the enterprise software business, but we thought, well, now we can actually go and raise more equity or debt. So we did this convert offering at $398 a share. Well, $398 a share was higher than the stock had traded in 20 years. So, if you had told me in March when my stock was $90 a share and I had $60 in cash, Amanda, so the underlying business was worth $30 a share. If you told me in March, don't worry, Mike, within 6 months, you'll be able to sell equity for $398 a share, I would have said you're crazy.
Yeah,
but that's what we
needed a Bitcoin astrologer for you on that one.
Yeah. So, we got that opportunity. So we did a $650 million, it started as $400 million convertible debt offering, but we had so much demand that we upsized it to $600 million and did this green shoe. So $650 million. And we sold $650 million worth of debt, which was convertible to equity at $398 a share. And we paid 75 basis points, less than 1% interest. And so we had that. Because, why wouldn't you? If someone was going to give you $650 million at 75 basis points, and the strike would be double, what the highest price would be expected 12 weeks previous. So then we took that and we decided, well, when we were raising the money, we said, well, the use of proceeds is general corporate purposes. And until we figure out what we're going to do with it, we're going to invest it in Bitcoin because that's our treasury policy. So the lawyers thought about that and they said, well, maybe it'd be better if we reverse the order. Because full disclosure, full disclosure is no exposure. That's the saying in the securities industry. So it was the attorneys thought about it. So this ended up being $650 million to buy Bitcoin. So it became the first Bitcoin bond. We kind of backed into it, how do we get to this corporate mandate? So we raised 650 million, then we bought the Bitcoin, and Bitcoin was like around 20,000 at that time. So we doubled our original investment, but then it went up from there. So pretty soon we had billions and billions of dollars of Bitcoin, and we looked at that and we thought, this is no longer just a treasury reserve strategy. We're now sweeping all of our excess cash flows into Bitcoin, and we just raised debt to buy Bitcoin. So we went back and we changed the 10K and we said, look, our company has two strategies. One strategy is we run our enterprise software business and we sell business intelligence software. And the other strategy is we acquire and we hold Bitcoin. So you think of like, I say Howard Hughes goes to Vegas and he believes that Vegas is going to be a big thing. So what do? You buy up all the land in Vegas. And you take all your cash and you buy all the land in Vegas. And then someone comes to you and says, you can buy the other side of the strip, but you don't have any cash. So you go to the bank and the bank agrees to give you a loan to buy the other side of Vegas. Mm-hmm. And then someone else comes and says, you could probably build a bunch of buildings on that land. So you get another loan for that, right? And so at some point, you're basically a real estate development company, and you're using a combination of equity and debt and cash flows to build your property. And Bitcoin is like, I'm not going to say Vegas in cyberspace. I think probably I like Manhattan in cyberspace better. It's it's property in cyberspace. And so we changed our 10K, and our 10K said we're going to acquire and hold Bitcoin. Very not complicated. People thought you're going to trade it, you're going to hedge it. Like, no, we're just going to own it. Other people will trade it. Other people will build applications on it. But I mean, the more pure analogy would be like, we decided to buy a bunch of land in Manhattan in cyberspace, and we expect that companies like Square and PayPal, they'll build applications on top of that land. Mm-hmm. And Binance and Coinbase. And the Bitcoin miners build their, they do their thing. And then Fidelity and insurance companies, they will build their applications on that property in cyberspace. And we're just going to own the property and we'll wait and see how it all turns out. So we changed our 10K. And I think when we changed our 10K, we announced that, then we became the first company in the world that had an explicit strategy to acquire and hold Bitcoin. And that kind of brings us to this call. Like, why am I here talking to you? Because I feel this affiliation with Bitcoin miners.
Yeah.
Because Bitcoin miners are the companies that are most closely like MicroStrategy, because Bitcoin miners also are companies built to acquire Bitcoin. And lately, many more of them are holding Bitcoin. So not all of them. Some of them just are built to acquire Bitcoin and sell it. But a lot of the Bitcoin miners are now companies that acquire Bitcoin and hold Bitcoin. We're like a synthetic Bitcoin miner in that regard, because I'm selling software and generating cash flow and converting. And so I'm mining business intelligence software, converting it to Bitcoin and keeping it. And then we can also issue equity or issue debt or converts in order to buy Bitcoin. And so in that way, we're kind of another type of Bitcoin miner. We're not running the Bitcoin mining rig, but we do exist to acquire and to hold Bitcoin.
Yeah, the mining treasury management strategy is interesting. It varies from company to company, from what, the conversations I've had with miners. But mining is really the foundation of the Bitcoin network, right? There is no Bitcoin without Bitcoin miners. So I think that it's been the most fascinating portion of Bitcoin that I've learned about since I started, diving into the Bitcoin space. What attracted you to get involved in the mining community?
I think that miners are the first line of defense for Bitcoin. Mm-hmm. Like it's pretty clear to me that if we want to create digital property in cyberspace that'll last 100 years, and I would like it to last 1,000 years. If you want something to last a long period of time, then it needs to be built on a very firm foundation. And I believe that Bitcoin mining is fascinating business because Bitcoin miners are in essence laying the secure foundation for the entire network because of the proof of work protocol, and then the way that the physics and the economics and the politics all interact. I look at Bitcoin miners and I think, well, a miner goes to Iceland, they need the political support of the Icelandic government. So, and a miner goes to Texas, they need the support of the governor. And the miner goes to China and they need the support of the politicians in China. Wherever Bitcoin mining goes, it garners political support. And if it loses that political support, it leaves, right? So miners are accumulating political capital. I feel like they're staking political capital to the network. And they're also staking financial capital in the network. They have to raise millions or tens or hundreds of millions of dollars. And that money is used to buy the mining rigs and also to engineer the mining centers and to operate them and to buy the energy. So I go to Wall Street and I get financial capital. And then I go to Main Street. I have to go get engineering companies and hire employees, and I have to build business. And I go to the State House and I get the political capital. And then I have to go to technology companies and I have to buy the mining rigs, which are, SHA 256 ASICs. So that's technical capital. And I end up, engineering this special mining center. And so, and it's going to take me 4 years, 5 years, 10 years to break even. So if I set up a business in a political locale where I borrow or raise a bunch of capital and bring together a bunch of people in order to do mining with the long-term objective of making money, I'm anchoring the network in time and in space. I've got a 10-year time horizon. No one ever sets up a miner to run it for 10 months and wind it down. I've got a 10-year time horizon, and I put down roots. And that's why I believe the Bitcoin network will last, because it's going to have the support of the mayors, the governors, the nation states. It's going to have these facilities that makes it, I said it anchors it in the political firmament. Right? If money is a social construct, then you cannot have hard money or strong money or sound money without political support. So it anchors the Bitcoin network in the political firmament, and it also anchors the Bitcoin network in the thermodynamic or physical firmament in the world of physics. Because you're staring at this facility, right, that's buried in the ice in Iceland, or it's sitting somewhere on top of a volcano or next to a reactor of some sort, and you can't just snap your fingers and make it go away. So I think that Bitcoin mining is fascinating. I think it's critical. I think it's what differentiates Bitcoin from like the proof of stake cryptos. I think it's what makes it durable property in cyberspace with integrity.
It connects the physical world to the digital world. Miners, right? They plug in their machines, and that is physical, and you can feel it, and you plug it in, and you hear it start humming, and that's real. But then you see, your Bitcoin coming online, and you mining Bitcoin, and it's a really incredible thing.
When I first got into Bitcoin, we all go down a rabbit hole, and I spent some number of months down that rabbit hole. But when I finally came out, I went to Twitter, and I don't know why. It was just like something spoke to me, and I typed, "Bitcoin is a swarm of cyber hornets."
Stuck.
And people wonder, what was I thinking? And I was thinking about those mining centers. And the hum of the mining centers everywhere in the world, that I thought it's a swarm of cyber hornets everywhere in the world, right? In cyberspace.
I thought it was always for the trolls on Twitter, but that makes a lot more sense. So when you think about Bitcoin mining, obviously one of the largest questions that have been, in our face lately has been the energy usage. How do you think about Bitcoin mining's energy usage, and do you think it's inherently bad?
I think it's inherently good. I think we would say it's a feature, it's not a bug. the energy usage enforces a decentralization of the network. What makes Bitcoin special is it's permissionless and decentralized, and it's stable. So how do I make sure that it's permissionless? Well, I use energy instead of using a issued token, right? If I use proof of stake and it's an issued token, then you have to have permission to run a validator, and the protocol decides who gets permission and who doesn't get permission. But if I use energy, anybody can generate energy anywhere on Earth with any number of techniques. And so the network's always going to be open in that regard. And that openness creates what I'll call like a healthy genetic diversity. You want a system where you've got continual fresh energy flowing into the system so that it doesn't become inbred. And I think that the energy basis of the proof of work mining is a part of that. I think the other part of energy usage, or the other dynamic, is that energy means that no one miner can monopolize all the hash power, because no one's ever going to be able to generate 51% of all the energy in the network in one small place on one grid. It's just too difficult, to amass that much energy. So it's natural that you'll find 100 megawatts here, or 30 megawatts there, or 20 megawatts there. And when you get to that extreme, you're going to find 30 megawatts of stranded energy that you can get at a marginal cost that's next to zero. And then if you keep pushing it, then you have to build out new capacity, and the marginal cost of the energy goes up. And that makes you uncompetitive, and that gives an opportunity for someone else with stranded energy somewhere else to enter and compete with you. So I think energy keeps the network decentralized, and it makes it permissionless. And then I think the third element is it makes it thermodynamically sound. If we want sound money, we need thermodynamically sound mining, because if I decouple the mining network from the worldwide energy grid, what I've really done is created a virtual world a la Second Life or Fortnite. And at some point, you can create a virtual world for gambling and for gaming and even for applications, but you have decoupled from the underlying physical reality. And that means that all of the security is based on the protocol. So for example, in a world that's energy based, it might take me 4 years to engineer a mining center and to bring in the rigs and to acquire the energy. And I have to get political support, financial support, and I have to get energy capital. That's very, very challenging. And that means that political reality, thermodynamic reality, engineering reality, financial reality, all of these things impinge upon my behavior. And they generally force a degree of virtue amongst the Bitcoin miner. No one's going to do business with an untrustworthy, miner living in their parents' basement that cackles, all the time. So you've got that dynamic. And then the other dynamic would be, what if I just obliterate all that and I created a complete protocol in cyberspace that attempted to emulate that? I could literally sit on my computer and then I could try to hack the protocol. Maybe I might try to hack the protocol 100 times a minute. What if I come up with a way to borrow money? If I can borrow from one coin, leverage it to a second coin, get 100x leverage to the third coin, accumulate 10 billion in the fourth coin, attack the network that's staked on the fifth coin, and do it through a VPN, all from a computer program, right? You're just betting on the protocol to prevent the attack from happening. And that means that I'm trying to design a protocol that emulates the rich complexity of the universe. And if I wouldn't bet on that, right? Like that, would I bet my life that someone can design a protocol that is better than the stability of the universe? I wouldn't think so. It's riskier. So the energy really does link digital property of Bitcoin into the firmament of the reality we live in. And I think that's really important.
Yeah, proof of work, I think, is one of the most beautiful things that have ever been created. It ties, it makes energy, which is a global universal currency, and it allows Bitcoin to use that. And like you were saying, I think it's the network dynamics of Bitcoin also forcing every miner to be at the lowest cost energy producer, right? So they have to have the lowest cost energy because they're competing with everyone else on the network. I think, all of those dynamics together really just make Bitcoin and proof of work something that is really unique and special that we can scale. Yeah, I think, the one thing that we haven't touched upon yet is, obviously you had mentioned that Bitcoin is this permissionless network and anyone can join, including miners. And that's definitely essential to Bitcoin's value. But it also does make it hard for Bitcoiners to advocate. So is that the part of the idea behind the Bitcoin Mining Council? And I know, both of us have opinions on that.
Well, I think the Bitcoin Mining Council is an idea to help further the development of Bitcoin mining throughout the world. We want to give miners some kind of open, voluntary forum where they can come together and they can share best practices and they can learn from each other. And I think that we want to create a forum where we can educate the general public. If you're a country and you have a volcano and you're trying to figure out how to monetize the volcano, then maybe the Bitcoin Mining Council might end up publishing case studies on how that worked out. And then politicians that would be otherwise too shy will have some resource. If on the other hand, you're a lone Bitcoin miner and you're in a jurisdiction, a certain state or a certain city somewhere in the world, and the mayor thinks that Bitcoin mining is going to boil the ocean, it'd be nice if there's a set of materials and models and information you can go to and you can pull off the shelf and say, well, look, we've done the research. Bitcoin doesn't boil the ocean. Bitcoin mining is, it's a solution to every political jurisdiction in the world, but most politicians don't know that. Bitcoin mining is the highest value and use for all the energy in the world, in my opinion. A SHA-19 or an S19 miner with Bitcoin trading at 40,000 a coin looks like it generates almost 40 cents a kilowatt hour. So maybe more with the hash rate dropping down the way it did last weekend. I mean, it's looking pretty profitable to me. It's looking more profitable than every industrial use of energy, because most industrial energy customers in the Western world only pay 10 cents kilowatt hour. And you can imagine the developing world, they wouldn't pay 2 cents kilowatt hour. In some cases, 1, 2, 3 cents kilowatt hours, most they can pay. So Bitcoin offers you something 10x better. But how many energy producers in the world know that? How many journalists know that?
Yeah.
Right? How many students know that? How many companies know that? And how many financiers and institutional investors know that? I think we've got a large education job ahead of us. Mm-hmm. And we've got if Bitcoin mining if it's as simple as to say, we're going to use 100 terawatt hours of energy, generate 135 exahash and generate 40 cents a kilowatt hour. If it was that simple, 99% of the world wouldn't understand it. And it would take us a decade to educate people. Mm-hmm. But Amanda, you and I both know it's not that simple, because S9s use 5 times as much energy as S19s. And the next generation of miners will use less energy and generate more hash. And the generation after that will use less. So you could see a rotation of Bitcoin mining and security from more energy intensive, less technology intensive, to more technology and capital intensive, less energy intensive. And it's happening everywhere in the world. And then there are all these other developments, with heat engineering and Bitcoin mining center engineering that are taking place. So there's a lot of moving parts. There's a lot of people that just don't understand things. Mm-hmm. People that don't understand things fear what they don't understand. And so hence, a famous politician is thinking, well, the Bitcoin is bad for the environment. Well, I think we can say, well, they're absolutely wrong, and we can bark, have fun staying poor, but that's not constructive. If that politician runs the country, then barking at them and saying, we're just not going to mine in your country, well, that's not the most constructive answer. The most constructive answer is educate them on why it's good for their country and it doesn't boil the ocean, and why it's actually the most clean energy they can embrace. I got to imagine when people first invented electricity, there were a lot of politicians that thought, if you wire my town for electricity, you're going to burn the town down. Mm-hmm. You know, it's like there was a struggle. Should the railroad come? Should the electricity come? You know, should we bring power lines and phones? And that took a decade, 2 decades. And so I think we've got a very evangelical educational task ahead of us. And if anything, the Bitcoin Mining Council is just an opportunity to raise awareness, educate, and get enough credibility that the mainstream media and mainstream politicians will be interested. You know, like if there's 400 different Bitcoin miners, everybody's working really hard, but they're all reinventing the wheel. And if one day some politician says, I want to call you before Congress or Senate and tell us why Bitcoin mining is good, which of the 400 Bitcoin miners should carry that burden, right? And if they're showing a presentation, if the presentation had 337 different brands on it, you know, you would end up spending all your time trying to look at the different versions. Whereas if the Bitcoin Mining Council brings together some Bitcoin miners and does some work and builds, you know, some kind of consensus that this is a good way to explain what Bitcoin mining does, we'll open source that in the public domain. It'll be free to everybody in the world. And maybe a Bitcoin miner in Korea or Vietnam will translate it to Vietnamese and Korean, and they'll take it to see their mayor or their governor, or it'll make it to China, or it'll make it to fill in the blank, Nigeria. And someone in the middle of Africa says, I think we should convert our waterfall into a Bitcoin mine. And the politician says, what do you know? And they're like, well, I'm just someone with a dream. But if they take Bitcoin Mining Council and they say, look, the Bitcoin Mining Council created this, and we can bring this, you know, to our country in Africa, then it has credibility. And then we spread the word, and we do it in a constructive way that's cheerful and eloquent, and we'll do some good. So I think we get a chance to do some good for the world here.
I think for me, the Bitcoin Mining Council will help foster transparency in Bitcoin mining energy, the debate around that. And another thing that I think about, and I think it's in line, similar to how you're thinking, if Bitcoin mining becomes something that gets clamped down on, a lot of the larger miners can do things like, you know, have open source legal documents that smaller miners don't have. So if we were able to provide that and give people help, why wouldn't we try to do that as a community? You know, the last thing that I always think about when we get pushback on it is, yes, we are all in this together, but we're all competitors, right? So every Bitcoin miner in the Mining Council is, you know, a business on its own. They don't represent anything more than, you know, their business and just trying to do what's best for Bitcoin and Bitcoin mining in general and its growth. So that's what like excites me about, you know, the work that we've been doing for the Bitcoin Mining Council.
I think one of the great things about the Bitcoin community is this credo of open source. Mm-hmm. And there's a little bit of a dialectic here, because on one hand, you're giving things away to the world freely. On the other hand, we all do have to compete. Mm-hmm. But I don't think that they can't both coexist. I think the strength of Bitcoin as an open monetary network is what allows us to expect it to last for hundreds of years. Mm-hmm. And I think that if I'm going to build on property in cyberspace, I want to know it'll be here 100 years from now. And if I know that the Bitcoin mining network will be healthy all around the world, and if I know it's open, and if I know Bitcoin, the monetary protocol, will be healthy and it's open, then that gives me confidence to make the investment in Bitcoin, the asset. or it gives me confidence to build the next generation Bitcoin Lightning wallet, or it gives me confidence to build the next generation of life insurance based on Bitcoin. And that's, I think, where you get, by the way, or it gives me confidence to create the next generation SHA-256 miner, or the next generation Bitcoin mining engineering facility, right? Or portable engineered facility. There's a lot of ways to compete and get a proprietary edge that all benefit.
Shared, right? Like that can be your own company prerogative. But yeah, I think there's, a bigger battle that Bitcoin as a whole is facing against this energy debate that requires some strength in coming together. But, I think that we've both grappled with this over the past couple of weeks is, we in 2017, obviously we saw a lot of exchanges try to come together and change the themes about Bitcoin. And so I think, what lessons are we learning from the Mining Council and how to make sure that we're not turning it into a ruling body?
Yeah, I think don't change the underlying network. When I look at Bitcoin mining, I think we want to have an open, permissionless ecosystem of Bitcoin miners that compete with each other everywhere in the world. And we want people to do things in the Bitcoin mining world that we don't know about. And we want there to be dynamic Darwinian competition and mutation, because that's what keeps the network healthy and vital. I think the same thing, by the way, about Bitcoin core development and the Bitcoin software, which is I'm not really a big fan of changing the underlying architecture. I'm a big fan of investing in the security and testing it and making it safe. And then I think you got to move forward with consensus very carefully. So I'm supportive of moving forward carefully to make it better. But I really am very enthusiastic about protecting it, and protecting it either in cyberspace technically, or protecting it politically, or protecting it in the marketplace of public opinion. I think it's very important that we protect it, and then we don't meddle with it. I mean, I've had big debates with people. They come back to this block size issue, and I point out, that the beauty of the block size being fixed is that as the block rewards decrease and as the block subsidies for miners decrease, the revenue from transaction fees increases, and the revenue is going to increase because there is scarcity in the block space, and people are going to bid more to have their transactions executed by the miners. And that's what creates the vitality for the miners, so that a Bitcoin miner can invest for the next decade knowing that their revenue stream is secure. And meddling with some underlying architecture like that, that's the same as me saying to you, Amanda, I think I'd like to change the speed of sound in the world. It's like, you understand you're going to break every single machine and airplane ever engineered if you change the speed of sound. All airports, all airplanes. If you change the Reynolds number, if you change the speed of light, you're going to break the universe. If you change the gravitational constant on the Earth, if you change it, all of our buildings break. And so these are fundamental things. 21 million, the size of the block, the architecture, they're fundamental constants. And, if you want to play God and go back 8 billion years and you want to change from 9.8 meters per second to 7.8 or whatever, yeah, you could do it if you restart the universe again, but don't change it in midstream, right? Because it's well enough settled right now. And that's what I think about when I think about Bitcoin. It's a stable architecture for the next 1,000 years. And the way it's architected is such that all the innovation and risk will take place on the layer 2s. It'll take place on Lightning apps. It'll take place in Square. It'll take place at Fidelity. It'll take place at Binance and Coinbase and Strike and Moon Wallet and Square Cash App. And it's an opportunity for Apple or Google or anybody else to plug that hole the people that run the underlying network, they should defend the integrity of the network and the durability of the network and the immutability of the network, and stay true to the core architecture, which is, yeah, we're gonna incrementally evolve. You know, a taproot can come if you think about it really hard and test it really hard, and you can upgrade from an S9 to an S19 miner. And you can, you know, you can continue to evolve things to make them more secure. And, you know, one day, 50 years from now, if we got to go to a slightly different encryption, you know, algorithm to be quantum secure, we'll figure it out then. But otherwise, I think the Bitcoin ethos is a core strength. And I think that the judgment of the Bitcoin OGs and the community that lived through the fork wars, and they lived through all of the stress and the trauma, I think it made them better, and it cemented in everybody the integrity and the wisdom necessary to shepherd this thing for the next 100 years. And that's one of the reasons that I'm such a big believer in it.
Yeah, I don't think Bitcoin needs fixing, right? We just need some transparency around energy usage. I think that will help.
The Bitcoin Mining Council, its agenda is simply to educate and communicate.
And, you know, I think that it will be really good for the overall narrative of Bitcoin. And speaking of, you know, we talked about Strike a little bit, but every week in Bitcoin is really exciting, but the past few weeks have been incredible. We saw El Salvador accepting Bitcoin as legal tender, China banning mining, and then Taproot being signaled in. So let's start with the El Salvador news. You know, they made their big announcement. What do you think this means for the people of El Salvador and for Bitcoin and just generally for the world?
You know, El Salvador was running on US dollars because they lost their currency after the Civil War, but they were running on US dollars with a conventional banking system with very weak connections to US banks. So what, 70% of the country is unbanked. So there's no connection between all the people in America and El Salvadorans in America that wanted to send money back to their relatives in El Salvador, because they have to go through conventional rails. You know, if we study the conventional Western payment system, Visa and MasterCard are taking 2.5%. And they're taking 250 basis points, and that's the best case you ever get. But of course, the Western unions and the other money changers, you know, they double it, and they double it again sometimes. So you're talking about 3, 4, 5, 6, even 10%. And by the time you tack on the cost of getting to a money changing center and getting back and converting into physical currency, you know, you've added another effective 3, 5, 10% surcharge plus risk. So they were running on a 20th century model. And the 21st century model, it's kind of obvious, which is give everybody a $50 Android phone and give them a digital wallet. And in that wallet, give them a digital currency like a stable coin, Tether, or the US dollar running as a digital currency. And then give them an asset like Bitcoin. And if I have, what are we saying? What we're saying is give everybody a $50 mobile device and a savings account and a checking account. And in the checking account, put the currency that's a medium of exchange in the country they're in, which is the dollar. And in the savings account, put the appreciating asset, which will go up faster than the currency collapses in value. And that's the Bitcoin. So I think the excitement in El Salvador is they're the model for the future. I think that it's inevitable. There are like 5 billion people with Android phones right now. There's another billion with iPhones or something like that. So we're 6 billion. There's 8 billion people on the planet, but call the other 2 billion kids. I don't know. There's no reason why everybody over the age of 3 to the age of forever ends up with a mobile Android or iOS device. And we know that 1.7 billion people are unbanked. But in the Western world, whenever we use that phrase, it's used in this antiseptic way. There's no, when mainstream media uses it or rich or entitled Americans or Western Europeans use it. They use it in this casual manner, like, and of course, some people in the rest of the world struggle with certain conditions. Like they say it like, oh yeah, it's an unfortunate statistic. But if you said it differently, if you said 1.7 billion people can't store economic energy for more than a week at a time, mm-hmm. Said 1.7 billion are type 1 diabetics, or 1.7 billion people are within 2 weeks of starving to death. If you said it like that, then you would think, oh, this is a real tragedy. This is a real mm-hmm. horrific problem. And then what follows next is that inevitable? Mm-hmm. And it's, I know, I was not really aware of this issue for a decade. Like I knew that I wrote the book, The Mobile Wave, and in The Mobile Wave, I wrote about mobile money, and we talked about using mobile phones to bank the unbanked, but I didn't understand it viscerally. I didn't understand it like, oh, there's 1.7 billion people a week from like destitution. Mm-hmm. I understood it like, oh, there's 1.7 billion people and they can't trade stocks on Robinhood, right? Mm-hmm. And when you really understand it deeply, you realize, well, so $50 solves the problem. All we need is a mobile application that supports a Lightning wallet. And then ultimately, you're going to either trade the US dollar or the euro or the yen or the renminbi, right? Whatever is the local currency that's legal. And that's probably 20 countries. 30, 40 countries, there's 100 countries where the currencies are collapsing, where they're just not credible, right? Like Zimbabwe or Lebanon, or El Salvador that already collapsed. Plenty of countries it's collapsed. A lot of countries, by the way, they actually peg their currency to the dollar. So they don't say it's collapsed, but if the DRAM is pegged to the dollar, right? If the Chinese have pegged their currency to the dollar by official exchange rates for the past decade. So if the country's pegged to the dollar or it's using the dollar, it's adopted the dollar as the medium of exchange. And if they haven't, they've got a collapsing currency like the Lebanese currency that lost 90% of its value over the past 18 months. And what does that mean? I mean, I don't know if you saw the story this weekend. It was horrific. In Lebanon, they've lost 90% of their value in the local currency in the bank. And the government froze all of the dollar balances of every citizen. They use the word froze, but froze means seize, because they're never getting it back. And right now, they're debating with the IMF as to whether or not they will allow people to get back up to $400 worth of their US dollars or not. And they're not sure, but they've lost the rest. So what's El Salvador mean? Well, I mean, El Salvador is significant because El Salvador is the first country that said, yeah, we're just going to use a mobile app that's got Bitcoin and dollars on it, and we're going to give people, economic sovereignty on 21st century Bitcoin rails. And it's significant because what you saw was all these other countries and all these other politicians in Africa and South America light up with laser eyes and suggest maybe this is not a bad idea. And then you saw the Lebanese collapse, and then it becomes clear that, well, maybe there's like 100 countries in the world with billions. I said 1.7 billion people unbanked. That's the best case. I mean, I think there's probably 4 billion people or more that they're either unbanked or they have collapsing currencies. And so the solution would be for them, download a mobile app and then flip their collapsing currency to Bitcoin and then flip their prices to the dollars. Like, people, certain people are shocked. They're like, well, why are you thinking this is good for the dollar? I'm like, well, because if you don't price in sats immediately, you'll price in dollars, but nobody wants to price in Zimbabwe dollars, and nobody wants to price in bolivars, or any other currency that's collapsing at 80% or 70 or 60% a year. They'd rather flip to the dollar. So I think El Salvador lights the way, and they really touched a nerve here, because it's, once you think about it, you're like, this is so obvious, right? Like 8 billion people with a mobile phone, and we just don't lose our money, and we don't need the banks anymore, and no one's going to steal our stuff from us. And everything is, instead of a 10 or 20% remittance cost and losing 1 to 2% of your, or 3% of your assets a month, or 4% of your assets a month, instead of that, now there is no remittance cost, and you just don't lose your money, and you can zap it at the speed of light effortlessly. So what keeps us from doing that? Oh, an Android phone. Oh, don't we have those? Yeah, sort of. So I'm very enthusiastic about it. I think we started a fire there. I mean, I think the people on Bitcoin Beach started a fire.
We certainly did. It's been really incredible to see all the news progress over the past couple of weeks and see how the different countries have lit up and said, "Hey, maybe there's something here." You touched on something that was really interesting. I think that we do see numbers like how many unbanked are in the world, and it's really hard to capture that and to like I don't know, like realize what that is, right? Even in the U.S., so I was doing some research earlier this year, and in the U.S., there's 7.1 million unbanked people. And when asked the question as why they were unbanked, 48% of them said that they didn't have enough money to meet the minimum bank requirements. And so when I think about Bitcoin, like there is no minimum bank requirement, right? Regardless of where you live, and allows like more access and control over your money, which is
I think one way unbanked people get trapped and victimized is through exorbitant remittance fees, but another way is through these payday loans, where they go to cash centers and it costs you $50 for an Android phone, but these people will pay $50 in interest payments a month to payday loans and the like because they can't get access to other services. I think most of them, at the end of the day, can afford a $50 Android phone, though. And even if they couldn't, there's that phrase, teach a person to, give a person a fish and feed them for a day, and teach them to fish and feed them for a lifetime. If we're going to make an investment, we might as well give people the $50 phone and put the bank on it, right? Put the bank of Bitcoin on it. If you give people a $50 phone and you give them money in Bitcoin, the value will go up, right? And then the killer application is a lightning checking account, and then maybe you start to borrow money against your Bitcoin. Abra announced a program about a week ago or so where they said they'll give you a 0 interest loan for up to 10% of your Bitcoin. 0 interest. So, I tell people all the time, don't spend your Bitcoin, right? If a Bitcoin is a trust fund. So if I put Bitcoin on a mobile phone, then it becomes a trust fund. And if you can plug into a Bitcoin banker, like an Abra or BlockFi or whatever, then you can actually borrow against the Bitcoin, which is going up. And you would be getting that at much better rates than the payday loans. And you can remit money, and you could do that at much lower rates than remittances. I think at some point there might be a bit of revolt against even the MasterCard and Visa, because they're hitting you with this 2.5% fee. And then it's so exorbitant that you've got these credit card companies offering you 1% cash back or 1.5% cash back. And it's like, okay, well, that's great. Thank you for the 1.5% cash back. But if you didn't charge the 2.5% fee, you wouldn't
give me 1% back.
I did a calculation on the Bitcoin network, and I calculated at some point, I think that transaction fees were running about 20 basis points of the network right now, but they would tail down. And so when the block rewards end, the transaction fees will be 5 basis points of the network. I think we'll get to a point where there's like 100 trillion on the network, a $50 billion Bitcoin mining revenue base, and it's 5 basis points. So imagine a world where you pay 5 to 10 basis points, and that's the expensive network, right? The Lightning network is less expensive. In a truly competitive monetary system, you would be paying 5, 10, 15 basis points to move your money around. You wouldn't be paying 250 or 400 or 500, and you certainly wouldn't pay 15% interest rates. The reason that you have that is because it's not competitive. And the reason it's not competitive is all of the regulation, which entrenches, quasi oligopolies, right, in the traditional finance sector. And Bitcoin and Lightning is breaking those oligopolies down. You see it everywhere. You see it on Binance when you see the basis trade is like 35%. You can short the future and go long the spot and get a 35% overnight interest rate. But you can only do that in Singapore if you're offshore money. And you can't do that in the US. In the US, the basis trade is 17 points, half as much on the CME, because the CME is not the NASDAQ, and it's illegal for the NASDAQ and the CME to both offer each other services. So, your conclusion is, well, nothing's changed, in the stock exchange in the US for 35 or 40 years. Nothing's changed. And the exchange Binance didn't exist 3 years ago or 4 years ago. Everything's changing. And the beauty of Bitcoin, I say it, everybody, is you could be a hodler in Alabama and you could just bury your Bitcoin on a hardware wallet in your backyard and you could hibernate for 25 years. And then some pool of capital in Siberia will loop their way through Malta, will find an exchange in Singapore, will do some risky trade with Hong Kong, and they will lock up all the Bitcoin and drive up the price by a factor of 100. And when you wake up from your long slumber, you will be the beneficiary, because you have people somewhere else on the network taking risk, using ingenuity, building technology to benefit you. And that's the benefit of an open monetary network. If you buy a bunch of land in Colorado, there's no chance that someone in Siberia is making a trade in Hong Kong to drive up the price of your land in Colorado. That is one of the problems of not being on the open cyberspace network. So this dynamic is going on with miners too, Amanda, which I don't want to leave them out. I think one of the most fascinating thing about Bitcoin mining is if you have $1 billion in New York City and you invest it in gold and you put it in a vault at JP Morgan, then you're counting upon JP Morgan, their security, the mayor of New York, the governor of New York, and the FBI and the United States government and their military to defend your gold. But
imagine
if you take
how much energy that takes.
A lot. And if any one of them turn on you, they can seize your gold, tax your gold, or regulate your gold, or lose your gold. On the other hand, if you have that $1 billion in New York and you put it in Bitcoin, your $1 billion of Bitcoin is being secured by a mining facility running above a volcano in Iceland, and another one running off a hydropower dam in China, and a third one running in Argentina, and a fourth one might be running off a volcano in El Salvador. And your money might be secured by the enemy of your friend. And if the mayor of New York and the governor and the federal government all want to take your money, they have to go and ask the Russians or the Chinese, which they can't even find them, right? There's someone in cyberspace coming through a VPN that you can't identify that's providing the security on your asset, no matter where you are. And so the idea that security is not co-located with the asset is a brilliant idea. And the idea that the $1 billion of gold in New York gets more security than the $10 of gold in Alabama on the gold network. But on the Bitcoin network, the $10 of Bitcoin in Alabama is just as secure as the $1 billion of Bitcoin in New York City. And so it's such an egalitarian, beautiful, powerful network that when you think
people,
you've got one group of people trying to drive up the value of your asset everywhere in the world all the time while you're sleeping, and you've got another group of people securing your asset everywhere in the world all the time while you're sleeping. You may never identify either of them, but they're both doing good for humanity, and they're both doing good for the Bitcoin network. And there's nothing else like that. I've never seen it.
No, it's amazing. I guess I'll end with one final question for you. So what external threats do you think Bitcoin might face? Like, obviously we see like the beauty of the robust network, the security, right, of miners being located all over the place. But what do you think could be something that would be a threat for Bitcoin?
I think I think that that Bitcoin's going to be beset by just continual, what would it be? Volatility, FUD. You know, there'll be this disaster. There'll be, you know, China will shut down some miners. Someone will speculate about maybe they'll ban it in India. Then they won't. Then some other politician will not understand it. Then there'll be some economic actor that will suggest this or that. So I think it's going to be continually beset by competition in a Darwinian fashion. Mm-hmm. But I don't think any of those things will seriously threaten it. I think that they will strengthen it. I think that all of that Darwinian competition will strengthen it. I think probably the most important thing is for the Bitcoin ethos to continue, for the community to keep its intellectual, ideological purity. Because as long as people are willing to put the ideological purity or the integrity of the network above their personal interest, their corporate interest, their parochial interest, then it will live on. And I think just like anything, right, it won't be defeated from without. It would have to be corrupted from within. Mm-hmm. So maybe the greatest threat to Bitcoin will come when it's 100x as successful as it is right now. Mm-hmm. And it'll be an ideological internal threat that will come from the internal.
It's definitely passed those before, right? Like we saw in 2017, et cetera. So you're right. I think the community and having like the core Bitcoin ethos and you know, staying true to that is what will really keep Bitcoin the way that we see it going. And you know, there may be like pockets of influence in different locations, like we see with China mining happening, right? But it doesn't affect the overall network because it is this decentralized, permissionless network that anyone can join. So it is a whole new system that I think brings a lot of new questions to like the people that are usually in order.
Yeah, it's like nothing we've ever created before. It's like creating life in cyberspace. It's really just an incredible, wonderful invention of humanity. I mean, I think of it as it's the first successful exercise in monetary engineering. You know, and I think, you know, in biology and people are bioengineering, there's always this fantasy of, can I create life? You know, can we create a new life form? And no one's created a new life form, but they're experimenting with it, this and that. I think that Bitcoin is that first monetary life form that we created, that we released in cyberspace, and it lived.
Yeah. Well, that is a great way to end. Miner Summit, thank you so much for having us. We hope that you enjoy the rest of your time there. Any final words, Michael?
Yeah, all the best to everybody. I know that Bitcoin mining is a challenging business, but it's a critical business, and we're all grateful for all your contributions to the network. So keep up the good work.
Awesome. Thank you, Michael.